My thoughts, me, David Smith, aka TintWeezl, aka the Enovix Whisperer. I've been called that before, the Enovix Whisperer, by myself, but accurate because I am. I am the Enovix Whisperer. And I, was never going to do another Enovix video again. If you'd like to see my prior ones, they're up there. So, now I'm right all the time for any reason. I don't care about the reason anymore. I'm just right. Whether the reasons are right reason, wrong reason, indifferent reason, no reason at all. It's just not my job. Reasons anymore. I assume you're an officer. If you're an officer of a public company, that your intention is to make money for you, yourself, for shareholders, even for your family. Just I know it's for you. That's a reasonable thing to expect. So, and shareholders benefit generally when if an officer of a company gives himself stock in the company, he wants the stock to do well, to have good earnings, so that his stock rises and he gets more money for himself. And if the shareholders benefit, well, so be it. So anyway, I predicted that Enovix would crash in July of last year. After I believe it was their August, they had some financial earnings release in early August or mid-August or something. In the 3 weeks prior to that, I said, when the stock was trading at $19 a share, I said it would peak below its annual high of about $25. I said it wouldn't quite hit 25, but it was going to go up a couple more dollars between then and earnings. But then once earnings came out, that it would drop below $10 over the space of the next. I'm just gonna make this like a YT video drive-by and just boom, 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 just like cap you guys with the hip shot of Truthiness, just boom, boom, and just and then back. Truthy, I am now your conduit of truthy communication. It's heading your way, unadulterated. So the earnings report, they lost money again, no surprise, in the exact same ways they always have, at the exact same rates too. The only revenues they had of any substance were from Root Jade, the South Korean old school lithium ion battery company they acquired, share transaction that diluted you guys if you're a shareholder. The short lockup period is, so meaning that they're probably already selling the share. But let me say this: I like Root Jade. They've been around for a few years, and they're a small, little, like family-sized South Korean outfit that, from everything I can tell about them, they care about their business. They're serious battery people in South Korea. That now that doesn't mean go pay $150 million in stock to buy a non-profitable battery, small time battery manufacturer. Maybe you should pay market value, but if you're in a hurry, I guess you overpay for it. And I think that's what they did, and that's the only complaint that I have about the reach, is that they overpaid and that I diluted their shareholders. Now, out of all of the things that I'm aware that they've done in Enovix as a company, I would say that this is the decision that I like the best. It makes sense to me, a lot more sense than the other things, because what was going to happen this quarter and last quarter if they didn't have Root Jade on board was, once again, the financials were going to come out and was going to say, oh, we spent $50 million in order to generate 20,000 in revenues, and all the revenues we generated were simply from samples, and it cost us $50 million to do, and we got 22. How we ever? Well, we're going to scale. Scale. That's what they've been telling us, like every quarter for years now, is, once we scale, we can, then the costs will come down. We're just making like artisan batteries right now. We're just making like little tiny specialty sample batches. Once we get a nice big order in from some big, it'll be popping out like crazy. We'll get that price down to a few cents per unit, and just boom, it's just money. And so that's always been scale. That's the golden pot at the end of the rainbow. But I've maintained for at least the last year that I don't think it was ever their intention to scale, and I certainly don't think it's their intention now. Nor did I think it was their intention a year ago. That's what I said in my tweet. That was the why of the whole Enovix whispering thing and the prediction that I made. It was all based on certain things that I put on what was going on, explanations I had in my head that sounded most likely to me what they were doing. What were they doing? TJ Rodgers was paying $58 million for R&D, per year, one of his largest expenses. In fact, the largest expense outside of any. It's higher than his all other management and labor costs combined. It was higher than the rent and utilities on their own for the plants. It was the single highest expense that they had. So it's like, well, 2 million was all Amprius, their competitor down the street there in Fremont, was paying. But Amprius already had a technology, silicon nanotubes, that was edgy. It was cutting edge that allowed them to keep scaling up their density, energy density. Whereas Enovix came up with a early on engineering feat where they put the 100% silicone anode in a stainless steel cage, which was sort of a brute force method of keeping it to mitigating the expansion of the anode to where it might break apart and or explode. So that was their solution. But the solution means they found out eventually that they had a hard cap on how much energy density they could get.
This material agnostic strategy, what does that mean? And they explain it. Oh, we want to be a material agnostic strategy. And they say it in here again. The thing is, they say that there are new batteries for these smartphones that they think that they're going to come and be competitive with. We believe EX1M and EX2M will be the first smartphone batteries in the world to use a 100% active silicone anode to drive category-leading energy density. But already, Enovix is not a category-leading energy density company. They tap out at 372 milliamp hours. Again, Amprius has 500 or 450. And the worst part of it is that Enovix's technology limits it to 372. The reason that they can't scale over that in terms of power is because of the limits of the brute force technology that they came up with to mitigate the swelling from the silicone anode. So Enovix already trails Amprius in every category right now, and they're just right down the road in Fremont. Also, there's so it makes you think, well, what's going on? What are they thinking? And then I came down to this. Core to this landmark achievement is our material agnostic strategy, which has allowed us to leverage leading materials suppliers to upgrade our anodes, cathodes, and electrolyte formulations from EX1. This is important. This tells everything, in my opinion. Material agnostic strategy. What does that mean? It means Enovix wants to be able to accommodate any materials to build batteries. It allows them to leverage leading material suppliers. That's what they said. To upgrade our anodes, cathodes, electrolytes. Listen again. This is a quote. Core to this landmark achievement is our material agnostic strategy, which has allowed us to leverage leading materials suppliers to upgrade our anodes, cathodes, and electrolyte formulations from EX1. Okay, now take that now, and that's material agnostic strategy. And then let's jump down here to where he goes on at the bottom. Toward this end, in January, we announced a collaboration with Group 14 Technologies. And indeed they did a couple months ago, 3 months ago, to develop a silicone battery using 100% of its anode material within the Enovix architecture. Wait, what? So they material agnostic, but now they're collaborating with a competitor to use their anode, cathode, and electrolyte mixture. Appears to be admitting they failed in their attempts to develop a workable competitive technology. And finally, thank you. Too late, too little, but it sounds like that's what they did, at least internally. They spend it however they're going to spend it out here. But they're basically saying that we told Group 14, a competitor, that we will use your anode, your cathode, your electrolytes, your materials, because now we're material agnostic, remember, and build your battery within the Enovix architecture. Really, the way I say it is Enovix is just a pimp for a Malaysian contract manufacturer now, trying to drum up clients like Group 14. We'll use your materials because we're material agnostic. Well, then what architecture doesn't say you just... And look, it sounds to me like what Enovix is trying to do is become is pimp out YBS International's Malaysian line to make batteries for Group 14, maybe Amprius, and these others. Is there, but it's not their line. It's YBS's line, and they're going to be the one making the profits off it. Whatever Enovix can skim off the top. Now, first of all, let me say, that's not what they're saying they're doing. I'm speculating. So, don't sue me and say, oh, you miswrote. I'm speculating because what's being said directly doesn't make any sense. Yes, of course I'm going to think, well, I guess the only thing that you could do with it, if you're using their materials and you're material agnostic, is send it to Malaysia and have them make it, complete it. And then here you go. And make some. So that's the only thing that makes any sense to me. If that's what they're doing, they should just come out and say it. Or maybe they shouldn't. I don't know. Maybe they, go to jail or something. I don't know. But this isn't intended for management over there to listen to. It's intended for people who might otherwise read the kind of earnings report that just came out, and the kind of forward-looking things that they're saying, and oh, this is this and this is that, and FATs and SATs site acceptance, authorization, this, that, all the garbage, and be dazzled by smoke and mirrors, because that's all I'm seeing. And it sounds to me like anode, cathode, you're going to your competitors. I mean, what else could it be? They lost 40 million in the fourth quarter of 2023, up from 18 million previous year. The numbers are abysmal. They're shutting down the R&D in Fremont completely, which means that's another 60-something million they're saving, and they're gonna, they're down to $200-something million cash. That's it, and they don't have any other. They had some warrants that they were able to have an infusion of a couple $100 million, in late 2022, but they don't have that anymore. So they're out of magic bullets, and I believe that this latest earnings report is if you read behind the lines, it is a surrender. It's a capitulation. It's defeat. They're winding down. All they're going to be now is a contract manufacturer, a pimp for a Malaysian contract manufacturer, a sales team selling battery manufacturing to the Group 14 technologies of the world, and perhaps Amprius, companies like that. Is there a market for that? Could you scale from there? Maybe, maybe not. But that's not how they're presenting things. And I believe that your best interest, if you're considering investing, if you're already investing in Enovix, is to not be lied to anymore. The stock has no business being up $2 after hours.